Up next on the SRI 360 podcast.
We manage a portfolio for Latin America. We're extremely unique and innovative because we tailor our investments to align with the company's business strategies. About 40 or 45% of all biodiversity on the planet is in Latin America. The EcoEnterprises Fund strategy was to come up with ways to use investment as a tool in the region. We provide mezz financing or debt financing or quasi-equity or equity financing, depending what the company needs, as well as provide high touch. The high-touch private equity or venture focus in the U.S. is ordinary course of business. It's not in Latin America. There's really a void in the marketplace, and we get intimately involved in the companies as well as provide that investment capital.
The SRI 360 podcast, presenting world-class investors and experts, passionate about improving the world and making high-performance returns through unique ESG, impact, and socially responsible investments. Here's your host, Scott Arnell.
Hey everyone, in this episode, I'm speaking with Tammy Newmark, and that's spelled exactly like it sounds, Newmark. And Tammy is CEO and managing partner of EcoEnterprises Fund, which is a pioneer in investing growth capital in nature-positive companies in Latin America that drive social justice and protect the Earth's biodiversity. Tammy has led EcoEnterprises Fund for a good long time, from its launch back in 1998. Since then, the EcoEnterprises Fund has invested in nearly 50 unique emerging companies in 11 different countries in Latin America. Prior to the EcoEnterprises Fund, she was a founder of the Environmental Enterprises Assistance Fund, and before that, she worked for the International Finance Corporation and JP Chase. Tammy is a co-author of the book Portfolio for the Planet: Lessons from 10 Years of Impact Investing, and she holds an MBA from the Wharton School of the University of Pennsylvania. I really enjoyed speaking with Tammy, and I hope you will enjoy my conversation too. And now, please meet Tammy Newmark.
I am on the East Coast. Actually, I hang my hat in Vermont when I'm not in our offices in Costa Rica and Bogota, Colombia. So that's where I'm right now.
Vermont. Yeah. I think the most I know about Vermont is the Bob Newhart show.
It is a beautiful place. I'm very fortunate to be able to do my work from here.
Where did you grow up at?
Yeah, I grew up in the metro New York area, but I haven't lived there for a good 45 years. So yeah, I did grow up on the East Coast, but I concluded some time ago that if I wanted to work in the Asia region, because when I got out of business school, I worked in Asia, hanging my hat on the West Coast would make much more sense, or of course in the region. But given the fact that I moved to Washington, D.C., my professional life grew out of D.C. and then grew out of the Latin America region, being in the same time zone, as well as being able to be in a place that I could get to the region in one day. It was a priority. So that's why I'm here. But
so you went to university, you went to Smith College, is that right?
Yeah, so that's New England. So it's not a surprise that I've stayed in the New England area.
And then you went on for an MBA at Wharton, right?
Yep, that's what I did. So
and what was your emphasis there?
Oh, yes. I guess my major was entrepreneurship. Even coming out of my JP Chase days, I was very much interested in entrepreneurial efforts and small growing businesses in emerging markets. And so when I went to Wharton, I focused on that really out of the entrepreneurial program. It was just a startup program at that time. In between my first and second year, I was in Mozambique. I worked in Mozambique. So when I got out of Wharton, I was more Africa oriented than Latin America.
Then your first job was at JP Morgan?
So that's when I got out of undergraduate. Correct. Yeah. So that's where.
So you worked a few years and then went to graduate school.
And so when I got out of Wharton, I went to the IFC, International Finance Corporation.
And that was in DC.
That was in DC. That's part of the World Bank. You may be familiar with it.
I know them. I've actually done some transactions with them when I was raising money for some companies, but more in emerging markets. I've never been there in Washington where they're at, but in places like Istanbul and
Yes.
Like that.
The IFC gig was quite an interesting one because I worked in a unit in which we worked specifically with certain corporations in the natural resource area, because that's always been my area of expertise. And in this case, it was an agribusiness. And they were looking to set up shop in various countries in Africa. And so it was really a bundling of smaller projects into one corporate whole. And that was quite intriguing. But while I was at the IFC, I was approached by a group that was starting up to set up a venture fund that focused on green investments. It was called Green Investments at that time, whether it was renewable energy or recycling or other green ecotourism at type deals. And so I jumped ship and I went to join the startup. And that's led me on the path today. So that was, what year was that? That was like 1992, maybe 1993.
This was the Environmental Enterprises Assistance Fund, right?
Correct. That's no longer around, although various different groups that were an offshoot of that are still around, but that entity is not around.
That was like a startup fund then?
Yeah, it was a startup fund from Winrock International. You may be familiar with Winrock International, which is a large economic development organization that comes out of Winthrop Rockefeller's work. And so Winrock International is still around and it still does work globally. But they launched a venture fund under their umbrella, and then spun it out as part of their renewable energy practice. So, I mean, Winrock International today is like one of the largest carbon offset evaluators. And they started that program when I was there at that time.
What were you doing there?
Well, I was an investment person. So I was one of the founding officers, and then we spun off the group, and I was the point person for Asia. So I worked in Indonesia and the Philippines, and I set up funds and different organizations in both places and India that did environmental business investing. So from that point on, I evolved to EcoEnterprises Fund, but it's really doing deals that are quite similar to the type of transactions that I was doing in the mid 90s. So, and we built portfolios, and we provided examples for other investors to come into the space.
So you had your Asia dream then, after all.
I did. So it's funny because I was working in Asia and my base at that time was DC. And then I was approached by the Nature Conservancy. And so that's where the pivot took place.
I have a note here that you were doing something at Technoserve.
I morphed from that position into Technoserve into the Nature Conservancy. So the Nature Conservancy approached me when I was at Environmental Enterprise Assistance Fund, and then I hung my hat with Technoserve for a few years before I joined the Nature Conservancy, because the project at hand, EcoEnterprises Fund at that time, was really at its early stage. And so until the Nature Conservancy provided a little bit meat around it, I was not going to join. And so I was at Technoserve for a little bit and established their environmental focus, and then moved to the Nature Conservancy. It was a good transition from one to another, and allowed me the regional focus, because I went from Asia. And at Environmental Enterprise Assistance Fund, there was a Central America fund that I was involved in. And then Technoserve was very Latin America focused, to then EcoEnterprises Fund.
Did you always know or always want to work in finance, or how did you end up working in finance? Is it something you always knew, or is it just something serendipity or what?
Yeah, well, I mean, I always had that inclination at Smith. I studied economics, I studied government, I was very good with math and that practical approach to some type of professional pursuit. But honestly, when I got the job at JP Morgan Chase, for me, it wasn't the goal to necessarily get there. I actually was just looking for any job in New York City at the time.
Yeah.
Right after college, I went to Africa. I was on an archaeological dig for a few months in Cote d'Ivoire and Mali. And I just wanted to move to New York City and hang with my friends and then do some interesting pursuit. And I got the job at the Chase Manhattan Bank at the time, happenstance, because you don't like to admit it, but my mother met somebody at a cocktail party. So there you go. So, I mean, she didn't get me the job, honestly. You know, I pursued it. I handed in my CV. I interviewed, etc. But this is 30 years ago. So,
you obviously were able to keep the job, which not everyone does either. So.
Correct. And so when I was there, it was a really incredible time to be there because I joined a training program and there were a lot of compatriots and colleagues that ultimately also came into the impact space. And I still talk with them today. And then a bunch of us formed this women's group called Women's Work in Progress, which focused on getting together on a monthly basis with various women in Wall Street, which, you know, at that time, there was just the growing presence of women in investment banking or in commercial banking or in the finance industry. And it was the emergence of microfinance, the establishment of like women's world banking. There was just really a lot going on of combining the concepts of finance into the field that we call impact investing today. And so consequently, that really energized me and got my start. And so when I opted for business school, I knew that was the path I was taking.
So you first got out of Smith and then you had a break and actually tried it out and then went back to get more.
Yeah, it suited me. Plus, I always played the role of translating conventional or traditional ways of thinking and then try to apply those skills, those tools, those concepts into other areas that you could add value. And so that's what really the whole finance approach or the investment thinking, or if you want to look at the private equity or investment banking, it hadn't been applied within the context of where I took my skills and my interests into that realm. It was only the beginnings of it. The overlap or the integration of the environmental or conservation or sustainability movement and thinking about finance or investment.
Now, most of my discussions with investment managers are somewhat straightforward. We talk about what their investment focus is and what their investment universe is and how they manage risk, what they benchmark against, how they select investments and so on. But most of the time I'm dealing with concepts that are somewhat familiar, and I spend most of my time picking their brain about their particular USP or variation on an established investing theme. But it seems to me that what you are doing is a bit different. I haven't spoken with anyone investing specifically in environmental preservation related ventures. And that seems to me to be a very differentiated strategy. Always very interesting to me, but there's a lot that I don't understand about it. Maybe to start out with, maybe you could just tell me in your words what your role is at EcoEnterprises. I mean, I know it's the CEO, but that can mean a lot of different things, and your focuses and your day-to-day priorities are different depending on the company or the fund. But then maybe you could start with a high-level overview of EcoEnterprises and what it's doing, what the mission is, but maybe at the 10,000-meter level for right now, just to frame everything else and provide context for what you'll be speaking about today.
Sure. So essentially, EcoEnterprises Fund is a venture fund for nature. That's the tagline that we've been using for the over 20 years. We act similar to a venture fund. So we're a small, nimble, boutique-y group that focuses on nature positive and social impact ventures in Latin America. And that's what we invest in. So myself, what do? I oversee the team, CEO, managing partner. I'm a majority owner of the GP and the fund manager. And I have a partner who also has been working with me since the get-go of EcoEnterprises Fund when we were under the umbrella of the Nature Conservancy. And what we do is we manage a portfolio, as any private equity group does as well. And so for Latin America, we're extremely unique and innovative because what we do is we tailor our investments to align with the company's business strategy. So we provide mezz financing or debt financing or quasi-equity or equity financing, depending what the company needs, as well as provide high touch. And so the high touch private equity or venture focus in the U.S. is in a lot of times ordinary course of business. It's not in Latin America. There's really continues to be a void in the marketplace. And so we get very intimately involved in the companies as well as provide that investment capital. And that is what I do day to day. So we manage our stakeholders, our governing bodies, our portfolios, and we undertake investments. And so that's it in a nutshell. Although, of course, there's a lot of details associated with that pursuit.
Is it one fund?
Since we launched our first fund in 2000, we have managed 3 funds. Fund 2 is in wind down, and Fund 3 is in its investment period.
The big picture is they're serial funds. It's 3
correct.
Funds. And how did you focus on Latin America? How did you come up with that as an exclusive focus for the fund?
Yeah, so as an outgrowth of the Nature Conservancy, our history is based on what some of the needs were in 1996, 1997, 1998, when the Nature Conservancy was doing its work. The Nature Conservancy is one of the largest global environmental conservation organizations, and it's been around for many years, and it's extremely innovative. It comes up with differing tools, conservation tools, to address the need to preserve and conserve ecosystems and lands. And at that time, when we were launched, the Nature Conservancy realized that it must work with local communities in which it worked to come up with sustainable livelihoods, to combine the land preservation and protection with working with local communities on the sustainability of the natural resource base. And so a business development enterprise as well as investment emerged as a strategy. And still to this day, about 40 or 45% of all biodiversity on the planet really is in Latin America. One of the main drivers of the EcoEnterprises Fund strategy was to work with local institutional players like NGOs, environmental organizations, Nature Conservancy partners in country to come up with ways to use investment as a tool in the region. And so I joined the Nature Conservancy with the focus of Latin America. And then when we spun off from the Conservancy, we did some legwork because we had investors that came to us and said, well, you're doing an amazing job coming up with these portfolios in Latin America. How about expanding into other regions? And we did due diligence and investigation to try to look at whether or not we could add value in the same regard in other regions. And we decided it was better to deepen and expand upon our work in Latin America rather than go elsewhere. So that's why we continue to work in Latin America.
And what is your AUM?
So currently we have 2 funds under management, and both of them are together combined about $150 million.
And I presume that's been increasing over the years from fund to fund?
Correct.
Like what Fund 1?
Fund 1 was quite interesting because as we launched in 2000, And in 2000, much different scene than today, right? So this is pre-organic agriculture, pre-impact investing, pre-everything. And so at that time, we were a blended value instrument. And so there's a lot of growth in blended value instruments in the impact space now. But at that time, we combined an investment pool, investment capital with technical assistance monies because we had to create a proof of concept. And so at that time, we had $6 million in capital and about $12 million in other monies to support the startups of these deals and our operation. The combined instrument was 10 million, so it was 6 and 4.
Tell me, what does nature-based mean and why natural capital is important or should be important to investors?
You mentioned earlier that a lot of our businesses seem to be agriculture oriented or sustainable agriculture, or you said food oriented. And when you look at economic activity in Latin America, most of the population is in rural communities. Most of the economic activity is agriculture based. So no doubt then our portfolio, when you look at the allocations, are really agri-based across the whole value chain. Well, what we consider as nature, we have forestry, agroforestry, we have aquaculture, we have agriculture, and then also we include ecotourism and also emerging opportunities, which have a tie into natural resources. And so natural resources are critical to the globally, of course, because we're all now recognizing the tie between climate and biodiversity and planetary health. And of course, are very much tied to local communities and rural communities and populations. And so that's why when we look at deals and when we invest in companies, we want to see that the companies are in collaboration or have working partnerships with the local communities, that there is a vested interest among all stakeholders for the long-term sustainability of that natural resource. And that's why, in my mind, you see the emergence of the whole natural capital conversation. And so the concept of natural capital, the concept of the planet as an asset and a natural asset has been around for some time, although now it's much more in the mainstream thinking. But certainly players like EcoEnterprises Fund, and we've been around for a very long time, that's been our underlying investment thesis and really the value that we bring to our investors and what we've been focused on for all these years.
Maybe just to make it real, explain to me some ways that your portfolio companies support the preservation of natural capital. For example, I think you have an investment in a juice company, Acai. How does that contribute to ecosystem restoration, for example?
Yeah, so the company that you mentioned is Sambazon, and we actually was part of the first investments that went into the company during its startup in Fund 1. So that's actually a company that has been in Fund 1 and has also been in Fund 2, and now it's a Fund 3 company because what we've really been, part of our underlying investment strategy has been the growth and the scaling and the leveraging of financial performance as well as the environmental and social impacts. And so going back to what Sambazon has always been about is working with local communities and saving the Amazon. And so Sambazon is actually the name of the company is part of saving the Amazon. So what the company does is it works with rural communities on the sustainable harvest of this berry called the acai berry that comes off of native tree species along the Amazon. So rather than cut the slash and burn agriculture or rather than deforestation of this region, the company works hand in hand with the community to provide economic upside for this product, and which is a compelling reason for the preservation and the conservation of this region. I mean, economic opportunities are important. The company has over time built 2 processing plants in country, which adds value to the product rather than just export the fruit. And acai, as a traditional juice, has been part of the Brazilian culture forevermore. So really, it's expanding upon and further developing this product in the region. And so Sambazon has stayed true to its original mission, as in working with local communities, whereas acai is a significant industry, and there are other companies that just buy from plantations, but Sambazon does not have a plantation strategy, and really has focused on how to continue to buy from these communities that retain and protect this local lands.
You've stated that the economic needs of rural communities are inextricably linked with successful conservation. I suppose if you have to feed your family or protect forests, you're going to feed your family. Can you explain why this is important and how it plays out with the kind of investments you make, how that keeps that linkage in mind?
So most of the companies that we work with work in areas, either grow its product, sell its product, work within places that have a natural habitat, that has a local habitat. And so going back to why this is important is because, as you said, families need to feed themselves. You need to focus on the health and well-being of local communities. So when companies move into these areas to grow product, to plant trees, so we have companies that have moved into areas and replanted, deforested cattle lands with citrus, like organic lime trees. So in those cases, so what you want to make sure is that the companies have a vested interest in the actual operations as employees, as small producers, as small farmers that actually also could sell product into the company. So it's like a fully sustainable unit, so that there doesn't continue to be slash and burn agriculture, or there doesn't continue to be over harvesting of a particular crop, which then forces communities to move elsewhere. I mean, you're talking about rural peoples, you're talking about indigenous peoples that are in these locations. And so that's why you have to look at it on a holistic basis. And if you see Sambazon, that's been working for 20 years. A lot of the other companies that we have been working with have been there for years. It's those partnerships that pay off, not only for the long-term investment prospects that we see in these companies, is the growth of the communities are really tied to the growth of these businesses. And that then, of course, for us to invest, we look for those leaders or those entrepreneurs or those business owners that are aligned with our thinking. Because if they just go into regions and just extract, then you don't have that long-term perspective that we're looking for as well.
What do you look for to ensure that the linkage is actually there?
Yeah, each company and each business model has a different type of relationship with local communities. And so in some cases, the company buys product from those local producers, from those cooperatives, from those local communities. In a lot of those cases, when they buy the product, then the companies also provide technical assistance. So they support the companies, or they support the farmers, or they support the communities with certification, or, fair trade, or health services, or water, or schools. There's some type of relationship established buying and selling product. There are other ways that the communities are also engaged in the companies. We've had companies that work with local communities, and the community has an equity investment in the company. We have communities that have local organizations, and they do the monitoring and evaluation of those companies. We have companies that support local community ventures. There's not one template, nor is there one approach. There's memos of understanding. There's partnership agreements. There are contracts. There are various different mechanisms to really formalize those relationships that the companies have with the producers, the smallholder farmers, the communities, the cooperatives, whichever way you're looking at it, depending on the company.
For the community to benefit in the long term, that would assume somehow an equitable value chain in the supply chain. Most businesses claim to have that. What's the reality that you find?
So what we do look for are certification regimes that have external consultants, external bodies that evaluate the companies. So we do look at companies that have fair trade certification, or we do go in when we do our own, because we have our own impact monitoring and evaluation approaches. And so when we go in, we talk with the local communities. We talk with local NGOs. We ensure that there is that equitable partnering. And if there's not, then certainly we try to improve it. But prior to any investment that we have done, we make sure that we do that rigorous due diligence that ensures that what you see is what you get. And so we're very much aware of the strengths and weaknesses across the board. In many of the deals that we do, in the legal agreements, in our legal investment agreements, we put thresholds, we put milestones, we have an environmental and social action plan within the agreements to ensure that the company's upping their game, as well as certain base requirements that we want in the deal are there.
How big is your team?
There's 7 of us, and we do, though, have a vast network in the region that we rely on.
And these third-party certifications, I guess my question is, you say you do due diligence. How do you ensure that all of this is credible? Because I think supply chain is famously not transparent, not just in Latin America, I mean everywhere.
Yeah, well, I think that increasingly it is. It's becoming, because transparency and tracking, traceability is critical. I mean, you live in Europe, so you know that there are increased regulations and protocols to ensure that each company knows where all their ingredient supplies are. And so in Fund 3, for instance, we've partnered with a group called the Union for Ethical Biotrade that's in the Netherlands, and they actually have been a very strong proponent towards this traceability and being able to track all ingredients. And so as companies scale and as the sophistication of the value chain becomes such, there are many more buying parties. So not only do you have fair trade or you have organic, you have different companies, whether, if they're selling it to Whole Foods, for instance, or selling into a retail chain. Even those entities now have certifying agencies. So this is beyond the ISO, or it's beyond the BAP or Global GAP. I mean, increasingly, these companies have certification staff. I mean, when we started EcoEnterprises Fund, you did not have environmental and social management plans or systems at company levels or in-house talent and professionals that focus on that, but now they do. Whether it's if they sell into an export market or sell into a local market, all of those paperwork and management and administration and operations need to be on the up and up in order to sell product into the market. And so that's a very positive trajectory that we're seeing within the market for a lot of our companies.
You do debt, you do equity, you do mezz. You're not restricted in any way about the type of investments. Do you have a preferred structure or not really?
Our preferred structure is really some quasi-equity piece in which we could get upside, but really retain the ability to get current income, as well as if we do some type of equity piece to get a put or an exit because we need liquidation. So we really look for some type of structured exit mechanism in order to get our money out. So we've learned that we don't do pure equity in Latin America. Just because of the stage, the type of businesses, the exit, cashing out and distributing our returns and capital back to our investors is a priority.
What do you benchmark against?
Well, what we benchmark against is market rates that people are getting on their investments. I mean, we appeal to and attract specific investors that are looking to diversify their portfolio and align their investment objectives with their values, with the sustainability mandate.
What kind of returns have you gotten on your past funds?
What we've made market returns. So Fund 2, let me just say, is winding down, but we're hoping to achieve a 6% to 7% gross on the overall portfolio. So that's for our Fund 2 and Fund 3, where the trajectory is higher than that.
Are your funds open or closed-ended?
They're closed-ended. They're 10 years, 5-year investment, 5-year out.
And typically, what is your exit strategy?
The way that we structure them, most of them just pay out. Most of them are debt-based or debt-like instruments, or instruments that have put options that get paid out over time, or instruments that have royalty payments. So we get cash within that 5 to 10-year period, which ultimately goes back to the investors.
Take me through your investment process. How do you screen and due diligence? How do you get down to actually making an investment?
We've been in business for over 20 years. And we've been in the region for over 20 years. So we know what's happening in the region, and we know where the deals are. So we started creating a pipeline in Fund 1. The deals that were ready, we gravitated and pushed them towards Fund 2. There were a handful of deals that we financed in Fund 2 that we actually saw 6 or 7 years earlier in Fund 1. And the case for Fund 3. So in Fund 3, thus far, we've seen over 400 deals. And the reason being is that we're one of the only players in our particular niche, and that either companies we worked with in the past, or co-financiers that we've done deals with, or our investors, or just general solicitations when we're out and about. That's how we generate our pipeline. And so getting back to, we know the industry, we know who are the movers and shakers of the region. We are increasingly seeing the children of some of the traditional business leaders in the region getting into more sustainable businesses. And so we are able to then pursue those deals, but we do a lot of proactive seeking as well as talking to folks. And so that's how we find our deals and pursue our deals. And then once we have a deal, then we do traditional, typical due diligence that a venture fund would do, but of course, within a different context, as in going to that company, going and visiting the suppliers, going and working with the local community. But we also rely on local experts, our lawyers, our financial advisors that are in country to do further scrubbing of the deal. We do have an investment committee that have been working with us for nearly 20 years. Our investors are part of that investment committee as observers. We have an impact committee who provides insight into the environmental and social attributes and aspects of our deal. Our environmental and social management system, which is very much integrated into the investment process. And so we have different risk ratings, whether it's on the environmental and social side or on the business side. Part of our due diligence, it's across the board, the type of analysis, evaluation, and scrubbing we do for every single transaction. And because we do work a lot in agriculture. We do work in forestry, agroforestry, aquaculture, and even in the emerging opportunities. The team has been working together for more than 10 years, close to 20 years. And so the team has seen a lot of similar transactions. And so we look at the cross learning at the portfolio level as well as the team level, and then allocate the deals accordingly.
Could you give me a couple examples from Fund 3 of investments that you made and how they meet your criteria?
Well, I mean, as I mentioned, Sambazon was one deal that is in our portfolio. And so all companies need to have growth potential, need to have returns, need to generate the cash that we need to get paid back, and need to have that vision and execute on that vision pertaining to the social and environmental mandate. Increasingly, a lot of companies are becoming B certified. I'm sure you are familiar with B certification, and that's becoming quite a trend, a positive trend in Latin America as well. So either some of our companies are already B certified or moving towards B certification. And so the range of companies that we do have in the portfolio include a company like Sambazon. They also include a company I mentioned that is in the organic lime business and planting trees on degraded cattle lands in Colombia to refurbish that land and rehabilitate that land, and also provide economic opportunities for the local communities. We have a company, and a really fascinating company, that is a member of the Union for Ethical Biotrade, that uses the biodiversity in Colombia to produce a natural dye, a natural colorant for foods, blue colorant for foods. And that company, it's called the EcoEnterprises. It works with local communities and actually has an existing agreement, and the first of its kind in Colombia, under the UN Convention for Biodiversity. It's called the Access for Benefit Sharing, ABS protocols. And you may be familiar with it. And so that, for us, what we look for are companies that are really pioneering unique ways of either working with local communities or unique ways of adding value to local biodiversity and selling it into the marketplace. And so EcoFlora Cares is one of them. Another company we just got involved with is an upcycling company using agriculture waste for products. And so we are seeing increasingly a handful of companies in the circular economy space. So you have upcycling of agriculture products. There, we are involved in another company that is using manure at the farm level. This company sells biodigesters for small and medium-sized farms. And so that then is part of the waste management system. We have also recently invested in a new next generation business. In each fund, we like to go that next step into a few emerging opportunities. And this company is in insect protein. And waste is used as base food for an alternative insect protein company. And so that's a very interesting company. And that also complements well. We do have a aquaculture company that we work with that has reintroduced native species for its base aquaculture operation. And so protein, like insect protein, increasingly is being used as feed for aquaculture operations. So once again, we look for those complementary activities, and also looking at a well-rounded portfolio in terms of country, in terms of stage of development, in terms of sector, in terms of export versus import, in terms of operation, and also instrument that we use. Is it a quasi-equity or is it debt? Every company we get really jazzed about, and there's so much to be said about the ingenuity and the perseverance and the resilience, as well as the underlying sustainability feelings towards these businesses. And you could be saying, okay, well, this is a pitch but it's really not a pitch. It's underlying. Each of these deals are really, over 20 years, what we've invested in about 45 companies. And I have to say that not all the 45 companies have succeeded. A majority, if not primarily, they're all still in operation today. And in some ways, they were market makers or pioneers. But over those years, we've had a few bad apples, maybe one bad apple. But, really, for the most part, they've stuck to executing the strategy that we bought into.
What is the ticket size that you look for?
So we look for deals that really are the minimum sales level of $1 million. So we want to see some operating history, although we've done a few new ventures that have come out of existing companies. But our ticket size ranged from about $1.5 million to $10 million. And we like to keep it about $3.5 million. So for instance, some of the companies like on the ecotourism side, they're smaller ventures because the footprint of an ecotourism operation is very important to us. Small is beautiful, and you really can't deploy more capital into those type of ventures. Part of the investment strategy is putting some money on the table and then do follow-on financing, either tranche our initial commitment, of course, based on milestones and based on benchmarks, but then also try to pile into some of the winners to help them scale further, expand beyond a country, more regionally, into other products, into other innovations. That's part of the strategy.
You mentioned before that started under the umbrella of the Nature Conservancy, and then you spun it out to be private. What was the impetus behind spinning out of the Nature Conservancy?
Really, the stakeholders in Fund 1 were pleased with the results of the portfolio, but the Nature Conservancy didn't want to scale it under its umbrella because it was really a program and not an investment fund. And so we spun out to really scale and create a investment fund. We still have a relationship with them. One of the things that happened at the Conservancy since we left, there has been other similar programs to EcoEnterprises Fund and another fund too that spun off and also went private. They were very much an incubator and an accelerator in that regard. But after EcoEnterprises Fund left, the Conservancy made a push and established Nature Vest. And you've probably heard, which is really their umbrella where instruments like this, like EcoEnterprises Fund, has come into, and that incubator or that accelerator that they've worked on for many years.
Your funds have grown in size in terms of AUM over time. This market evolution, is it an evolution in supply or is it demand for capital?
For our fund, it's a combination. One of the things that we've always said, or I've always said from the beginning, is that we will stay in business if there is a need and if we could provide that leadership and that creation to help create the market. Once local organizations, the local capital markets, if in Latin America, if they take this on, then that's great. We work ourselves out of a job. But right now, the capital markets in the region are not focused on these transactions, are not providing the type of capital nor that high touch, that they're not sophisticated. They haven't gone to that level yet where we're seeing the bubbling of it, but they haven't gone there yet. And so there's still a need for us in the market. There's still a increasing need for more capital because there's a lot more demand and there's a lot more investor interest.
Why is it mainstream capital is overlooking these transactions?
It's risky. But so markets go towards where they can make the best bang for their buck. So in Latin America, for instance, there is much more of a vibrancy associated with tech deals, with education deals, with health deals, with renewable energy. It'll get there sooner or later, but it's not there yet. Plus the type of returns. We're talking agriculture. We're talking rural areas. We're talking working with local communities. It takes it's not a short-term investment. It's a long-term perspective, and it requires a digging deep and driving it.
You mentioned that you're high touch, and I guess you're referring to that your portfolio companies, you provide technical assistance to them. Can you describe what that looks like and why is that important?
Yeah, so what we want to make sure is that the company has all of the elements that it needs in order to succeed, right? So some companies are very strong on financial management, whereas other companies are not. So the business advisory support that we bring in, we really try to identify where we could add value, whether it's forecasting, whether it's financial management, whether it's cash flow, whether it's pricing, or of course, whether it's marketing or governance. So a lot of times small companies don't have a functioning board of directors, don't have functioning shareholder communication, all of those base elements that that you recognize. We recognize that a company needs internal capability and capacity. We help support that. We identify it, we help support it individually and on a one by one. In different cases, we bring in consultants or specialists that can help the company. And that goes for environmental and social as well issues.
Is that the cost to the fund or is that a cost to the company?
So for the most part, we pay for it, but we do have in Fund 2 as well as Fund 3, we have one investor that is willing to put up matching monies. So we do have some matching monies in both funds that enabled us to provide grants or to buy the services of someone to add value.
And tell me what the profile of your fund's typical investor is and why do they invest with EcoEnterprises? Is it passion? Is it mission? Is it returns? Does it matter?
We have a track record. We have experience. We've been here for some time. What they see is what they get, as well as we're extremely transparent. And investors, if they want to participate at the investment committee level, at the impact committee level, or come down and visit our companies, they're most welcome to do that. So it's a very engaged investor base. And many of the investors from Fund 1 have come into Fund 2 and Fund 2 to Fund 3. And so that continuity has always been one of our secret sauces.
Right.
So.
Right. That's always the best report card when someone goes from fund to fund. You're on your third fund now. How have your investor profiles changed over time?
Yeah, I think just overall, I think that there's more interest in private investors, from family foundations, from family offices who are interested not only in learning about the space, but co-investment opportunities. So I think that's where we see a little bit more uptake. We have the same sort of institutional investors that have been consistent over time, like development finance institutions or larger foundations. But from a private investor point of view, both European private investors as well as U.S. private investors, we see much more interest and consideration for our types of funds.
Right. Are these specialized private equity investors? Are they big players or small players?
Yeah, you get a mix, I think. One of the things that we have always found important was that if there is a U.S. or European investor that wants to come in for a small amount, that we are open to that because we see it as our sort of effort to be a change agent, to get to provide that communication, that education, that learning about the space, to see that investing where we invest in our niche is a appropriate investment strategy and a good investment strategy. And so consequently, we do have some investors who came in with small bite sizes in an earlier fund and then up their commitment in a later fund.
Do your investors in your fund have downsides that are specific to your strategy? Obviously, anybody investing is exposed to overall large macro market or regional issues, but are there any downsides that your investors are exposed to that might not be the same for macro investors?
Yeah. So one of the things that I guess I should note is that we've been extremely transparent in the learnings. And so there have been instances where things went south or things didn't work out. The situation didn't work out that we expected. But we actually published all of those lessons from Fund 1 in a book that came out in 2011 called Portfolio for the Planet, 10 Years in Lessons Learned. And you may have seen it on our website, but we're actually in the process of doing a revised version of that for Fund 2 that catalogs and reflects learnings and what we saw in deals and case studies so that others in the field could learn from it. Because we have found that, especially early on, that there was not much communication as to what worked and what didn't work. And so now, 20 years plus since, we know what works and what doesn't work so that our investors, going back to what you noted, our investors could see, oh, this is the way that they structure deals, or this is what they learned from this situation, or this is how to diversify their portfolio. So avoid some of those macroeconomic risks that may come to a country like Brazil, but be avoided in Ecuador, whatever.
Right.
The only other risk, obviously, we do have a whole sort of strategy at risk mitigation and like any sort of investment shop. And we also have a very comprehensive environmental and social monitoring program, because one of the things that we're very, very mindful and very sensitive about are the environmental and social benefits that accrue from our companies, any impacts that could take place at a small producer or at a company level. And so those type of our concentration on how to manage those risks, how to enhance environmental and social outcomes, positive outcomes, that is also part of our strategy. Getting back to risks on the investor side, I think investors continue to buy into sort of our track record or sort of what our approach is, because they see that we have those frameworks in place. We have those systems. We know what we're doing in our particular niche of business. And so that then mitigates some of those other factors that you are you're alluding to. In the first book, and we put it forth, what happened was we invested in the first organic spice company, and at one time in the marketplace, the cardamom prices went through the roof. And so the local community that the spice company was working with decided to cut down trees to plant more cardamom versus a sustainably managed approach. And so what did the company do? The company worked with the small producers in the communities to plant trees, to do reforesting, to work on supply and demand dynamics, to work on improved certification schemes. So those realities do come up over time. And today, it's a much more sophisticated approach than it was 10 years ago or 16 years ago. But nonetheless, those things that's what we try to address and try to get on top of as soon as possible.
You're one of the pioneers in the natural capital investment sector. Now, because of trends or maybe fashion or whatever the dynamics are that are driving it, there are new entrants looking to raise significant amounts of capital in the sector. For example, the HSBC Pollination Fund that's targeting, I think, something like $1 billion. What's the implications of these new entrants into natural capital in the region you're in, Latin America? Is the market constrained by a lack of suitable, profitable, nature-based businesses to be able to deploy capital? And if you have such large players coming in, is there a risk that these big companies will come in and in the end we'll end up with more impact washing? Is there enough pipeline and opportunities out there for large players coming in are, significantly larger than the AUM you have right now?
Yeah, I think that this is how markets evolve and how businesses transform. And I feel like the HSBCs or the BlackRocks or the JP Morgan Chases of the world, there's a lot of large funds out there that are raising capital for natural resource based companies or social impact enterprises. And I feel like our niche is quite different than what the deals are that they will be targeting. So that there are infrastructure deals, there are renewable energy deals, there are companies that get beyond our bite size because they scale that might be applicable pipeline for these other players. But certainly I find the complexity and the dynamics and what is needed at our level of investment to be such that certainly I don't see that these other players will be co-financiers in our deals anytime soon. It may be a Fund 5 situation, but certainly Fund 4, we're not even seeing it.
How would you distinguish between what you're doing and where you think they'll be playing?
I think that we deploy smaller amounts of capital. I think if you have $1 billion assets under management, how many deals can you actually manage under that portfolio? And so a lot of the players that were looking to get into this space versus going directly and doing a venture approach, like they went through financial intermediaries. So, for instance, there are a lot of the microfinance institutions that have gravitated into more of the small to medium sized investment niche that has put more money to work in regenerative agriculture or some emerging technologies related to nature-based solutions. I mean, as fintech is very hot, so there's a lot of money going into it. And so some of these deals are much larger than sort of our bite size. And so there have been attempts to get at smaller deals like we're focused on, and really a lot of investment has gone into financial intermediaries in the region, which is very good because it still gets more capital into these deals. But as in the private equity or the venture business in Europe or the United States, it's extremely active. There are a multitude of players. Everybody has their area of expertise. In some cases, they co-finance or they compete. And the capital markets are not as deep in Latin America for these type of deals yet that I see those playing in our space.
What does impact washing look like to you in your region, or is it even a thing?
Well, when we started in this business, in 1998, it was greenwashing. So now is the new term impact washing. It's the same in my mind. So there'll be deals that are repackaged and now say they're environmental deals. There'll be agri deals that are repackaged and now say tech deals. So, I mean, you know what? I feel like it behooves us in terms of awareness and in terms of change to get these terms out there, to get the conversations going, to get large studies. I'm sure maybe as part of your research, you looked at Sculpta review that came out by the UK Treasury on biodiversity earlier this year. There's a whole sort of push towards biodiversity and natural capital that could only bode well. As an investor, that's what your due diligence is all about. I mean, investors, when we raise our fund, there are similar type funds that may be capital raising at the same time. And I have heard on numerous occasions, oh, that fund down there is promising 25 to 40% returns. And I'm like, okay, I've been in this business nearly 30 years. I've never seen that. More power to you if you can find it.
I just got a few rapid fire questions left to wrap up our talk. So you just give me whatever comes to your mind, or feel free to take a pass if nothing comes to your mind. But if you had to name the one most important challenge in the VC sustainable investment space at this time, what would it be? Well,
I think that question, and I know this is rapid fire, but it has a larger point, is that VC sustainable investing is huge. So at all the different spectrums of how you might define that term, there are challenges across the board. So
You see it huge in the sustainable space on the VC side?
yeah, I mean, because it's like, well, how do you define VC? How do you define sustainable investing? When you go to these conferences, there's a lot of talk of ESG. How does ESG merge? Publicly traded versus private equity. I mean, when you use the word natural capital, when people are talking about sustainable investing, different people, different players come at it and use the same terms for different niches.
So is your response to my question, we need to have common language?
No, because I don't think any common language will ever evolve in this. I feel like impact investing, for instance, has various different silos or various different categories as well. I mean, in our first book, that Portfolio for the Planet book, the first chapter is all about definitions because we had and it was at the time of right before we went to press, all of a sudden, impact investing came as a term. And so I'm like, oh, this is perfect. Then at least, you could glam on to some type of understanding. I think as an investor looking into it, you have to then decide what you're looking for and do sort of investigation and research or get an advisor to tell you or learn from it. But I don't think necessarily that the definition, those that are steeped in it know exactly what's going on. And that have been doing it for some time know exactly what's going on. In our particular niche, I have to say the overall sort of challenges have remained constant. But really, in the venture business, you're dealing with entrepreneurs and small businesses and growth. And if you're working in Latin America, you have additional challenges at hand. And the resiliency and the wherewithal and the power of the executive team and the leadership is still what it's all about.
Okay. So that wasn't terribly rapid fire, but
sorry.
We may have why as we go. So let me ask you this. What do you know now about sustainable investing that you wish you would have known in 1998 when you came to EcoEnterprises?
When I started doing these deals, the characteristic and what we've learned the most about the track record is really the people. Now, let me just say, what do you say, battle worn? I'm not quite sure the term, but you know what I mean. It's learning to identify, manage the entrepreneurs and the business growth in your portfolio.
Right. All right. You don't have to name any names, but can you describe an example of an investment that you were convinced of at the time you invested, that it ticked all your boxes, but in the end it didn't turn out? And what did you learn from that?
Yes. So the thing that always surprises me is that, and this has happened in a few of our deals, that although in success, management and the executive team thrives, if something goes south and the pressure on, there are certain entrepreneurs, there are certain businesses that are able to face it and overcome it. And then there's certain people that just go down. And so what we have learned is that those, I think in business school, they call it the Icarus paradox. So you get too close to the sun, the whole like ego thing. Yeah. So I think that we have learned that first, we need very strong working relationships and partnerships. So that's why we have that high touch involvement. Yeah. And second is that we have to really know that there's going to be listening, learning, pivoting, adapting, and at times there isn't. And when that's the case, then there's nothing you could do to rescue the business.
Have you learned better somehow to judge before you make the investment of what type of management you're looking at, whether they're ones that are going to thrive under duress as opposed to the ones that just collapse?
Yes. As I mentioned to you, a lot of our deals, because we like them, because they're interesting or they add value or They're run by women. So we put them in the pipeline and then we watch their growth over time. And so one deal that has come up, I met the principal many, many years ago. And each year I said, the company's not there, the company's not there, the company's not there. And then one of my colleagues said, I really want to do this deal. And I said, okay, are you ready to take on management? And she said, yes. And I said, okay, go for it. We have yet to see the result of that. But all I know is, and what is really, I think, good for me is that my colleague is really going for it, delving deep, helping manage the company and getting it to the other side. So that's something. So I identified it. But if somebody else wants to take it on, that's great.
So now the converse of that, maybe you could describe an investment that you were skeptical of at some level at the time you invested, or maybe you ultimately passed on it. And then in the end, it turned out way better than you thought. And you were pleased you had invested, or if you had passed on it, you wish you had. Did you learn anything from that?
So I have to say that I'm more conservative in sort of businesses than maybe others within my team. And so when we sit around to talk about pipeline transactions, we get very energized by next generation ideas, but I can't connect with the product. So you have a lot of new food and beverage items or sort of the next generation ag tech company. And whereas I would opt for more of a straight avocado growing or food processing company, there is branding plays associated with companies that are interesting and that get a lot of buzz. And so so there have been a few companies within our portfolio that have gotten a lot of buzz, that have been very successful, that I would not have opted to invest in at first.
All right. And then if you were talking to a young Tammy Newmark today who wanted to get into the VC sustainable investing space, how would you advise her to get into the business, but in this environment today?
Yeah. So, we do get a lot of calls of those that are in the field. And for me, that's fantastic because, of course, now business schools and even myself, I taught a impact investing class for many years at Middlebury College. And so there is that sort of traction of that talent that's coming into the field. And so because of the deepening of overall impact investing, you don't necessarily have to have an investment background per se, because there's various different roles that you could play. So what do I tell people? Get your foot in the door anywhere.
Specifically focused on sustainable investing, or is it get your foot in the door anywhere to get to develop good investment skills and then?
Well, it's within the impact investing space. There's a lot of players beyond impact investing. So you could work for an environmental conservation organization if that's your thing, or a social entrepreneurship group, or a accelerator, or if you want to do international travel, I always say, move to Ecuador, set yourself up in Quito, start knocking on doors. So, but if like yesterday or the day before, I spoke to somebody who wanted to go into impact investing, but went from project development and was really focused on the investment side. And so then I said, you got to go work at a financial institution. This is like coming out of undergrad, which is much different than coming out of business school. But if you're an undergrad and you want to become a finance person, then you need that finance training no matter where you are.
And the last one I wanted to ask you about, if you could quickly and easily organize a sit down with anyone you wanted in the entire sustainable, responsible investment space, who would you like to sit down with and pick their brain about what they're thinking or what they're doing?
Oh, that's a very interesting question, because we've been in this field for so long and we know everybody in the field, essentially, so unfortunately, I don't have an answer for you, but when I was thinking about who I would sit down with, the most Like for me, I get most inspired, and this is why I've kept in my work for so long, is for those that are really making a difference on the ground. So really changing the way people think, like over the long term. And so who came to mind? Like Jane Goodall. Although I think I've met her in passing, but you know what I mean? Like for me, I'm connected with the environment. So in the larger context, it would be like yesterday I was thinking, I'm like, who? Christiana Figueres. She's very much involved in climate change, but I know her. So, but I'd like to have lunch with her again. But it's like those people to reconnect with or to be inspired with, and very much women, because they're really championed and heralded the change, and being a women-owned and managed fund, and the fact that we try to focus on that gender justice and gender equality, that to me would be very energizing just to get that.
Yeah. I'm not sure I was able to hit on that. I did notice that you are mostly, I think you actually say that you're a woman-run fund, although that's not like really your gender focus or anything like that. How does that play into your zeitgeist, so to speak? I mean, why is that a competitive? You almost talk about like it's a competitive advantage or something.
Well, I think increasingly investors are interested in focusing on a pledge for social equality, for social justice, having women more involved at a investment level as well as a company level. And we realize that since the get-go, we've always made that sort of part of our fabric or part of our operating philosophy, but haven't really elevated that to expressing it. And so I feel like that's important to raise awareness, to be aligned with our investor interest, and to help change how the whole sustainable investing industry will evolve. Because if you make women front and center or elevate that type of returns, and now as the whole gender lens, gender smart investing, funds focused on women only, all of those are important. But for us, not only the women, because a lot of the small producers are women, a lot of the employees are women, a lot of the executive team is women, especially on the operation side. But, for us, and we talked about this yesterday, a lot of it has to do with local communities, indigenous peoples, all of that. And so now we're just making it part of our communication.
But to make sure I've got it right, it's a all-woman investment team. I mean, your team is all women, but your investments don't go only into women only, or is the majority women-run companies, or do they?
No. So our team has one male on it, John McKenna. And I mean, you could see on our website who's on the team, because we also have an investment committee and we have an impact committee that's quite diverse. But, the GP and the fund manager are owned by women. But as to our fund per se, we have a challenge. We're part of a program or a initiative that's called the 2X Challenge, which you may be familiar with. And so all of our deals are actually 2X Challenge deals, but we have about 50% of our deals in women-led and managed deals. It's not our number one criteria, because we look for returns and environmental and social impacts. But it just so happens when you look at the data, that's those thresholds that we've achieved.
Yeah. Can you explain the 2X Challenge briefly?
Yeah, so the 2X Challenge was established, I think, by development finance institutions, and you could check out their website. The goal was to get as much investment capital and other financial resources to push for gender equality and push for women and girls across various different programmatic approaches and in society. And they have different criteria on the investment side as to thresholds to reach. For us, on the investment side, we look at how many women are involved in the companies, what's the percentage of ownership, et cetera, which I just relayed.
Tammy, you've been very gracious with your time, and congratulations on the success you've had and what you've pioneered. That's a region that's dear to me. I really appreciate you participating. I've learned a lot.
Yeah,
And
thank you.
Listen, thanks again for your help.
You're
We'll be
welcome.
in touch. And
Okay, thank you so much.
all right,
Okay.
you too.
Okay,
Bye now.
bye-bye.
You've been listening to SRI 360. If you enjoyed it, please hit the like button and subscribe to get future episodes. You can find an archive of all previous podcast interviews and more articles and information on SRI, ESG, impact investing, sustainable investing, and socially responsible investing at our website, sri360.com. If you'd like to read more lessons learned from world-class SRI investors, get a copy of Scott Arnell's book, Sustainable and Responsible Investing 360. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact, all with market financial returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 is now available in hardcover, ebook, and audiobook format wherever books are sold.